Welcome back to the channel, guys. After 4 weeks of continuous losses, last week finally ended on a positive or sideways note, with all four major indices closing in green. Let's quickly go through the key reasons behind this pause in the downtrend. The FOMC meeting last week had a few important takeaways. The rate cut decision remained unchanged, with the Fed reaffirming its plan for 2 rate cuts in 2025 as expected. The economic growth projection was revised downward, with GDP growth now expected to be 1.7% instead of the previous estimate of 2.1%. Inflation expectations have also increased, moving from 2.5% to 2.8%, and the unemployment rate projection has been adjusted slightly upward from 4.3% to 4.4%. While these macro numbers aren't great, they are not bad enough to trigger any major recession fears either. So why did the market react positively despite these revisions? The key reason, apart from the rate cut confirmation, was the Fed's decision to slow down its quantitative tightening process. Previously, it was reducing liquidity in the system by $25 billion per month, but now that figure has been reduced to just $5 billion per month, meaning more money will remain in circulation. To put it simply, think of the US economy as a bathtub, with the Fed controlling the drain. When it wants to reduce money in the system, it pulls the plug and lets water, or in this case, money, flow out. This is called quantitative tightening, and it helps prevent inflation from getting too high. But now, by reducing the outflow, the Fed is allowing more liquidity to stay in the system, which is something the stock market always responds positively to. This shift has helped neutralize recession fears for now, leading to a positive market reaction. But even in this overall gloomy scenario, there are still pockets of strength in the market, with some stocks showing impressive price action and breaking out. The first one on our list today is Equinor ASA, with the ticker symbol EQNR. The chart I have pulled up is on the weekly time frame, where we can see a clear downtrend breakout. This stock made a high of approximately $42 back in August of 2022 and has since been in a prolonged downtrend, consistently facing rejection from a prominent trend line. In this downtrend, there was a touch point in October 2023, and from June 2024 until February 2025, the stock repeatedly attempted to break through but failed. However, last week we finally got a confirmed breakout as the price closed above the trend line. Looking at some key metrics, the 50-day exponential moving average, highlighted in white, is currently below the market price, meaning the stock is trading above it. However, the stock is still trading below the 200-day exponential moving average, highlighted in yellow, which is positioned around $27 and could act as a strong resistance level. Additionally, there is another price resistance forming at 26, so for a stronger breakout confirmation, the stock needs to clear both this level and the 200-day exponential moving average. For now, the setup looks promising, and the breakout has happened, but further confirmation is needed. As always, it's advisable to wait for a pullback before entering a trade to avoid getting trapped in case this turns out to be a false breakout. Since I have worked with and analyzed so many charts, I can say with a good amount of certainty that most breakouts in the market do not play by the textbook definition of a proper breakout. More often than not, they turn out to be false breakouts. That's why it is extremely important to approach breakouts with the mindset that they have a high probability of failing. Your entry should always be as close to the trend line as possible. This way, if the breakout turns out to be false, you can exit with minimal loss. Even if you see a stock breaking out and moving up rapidly, do not regret missing the trade if you haven't entered. It's okay to let it go. Breakouts that continue straight up without pullbacks are rare, and while you can enter them, you should do so with a limited portion of your capital and aim for small profits of around 4 to 5%. The ideal scenario is to wait for a pullback and look for signs of bullishness before entering. If the stock takes support at the trend line or forms a green candle exactly at that level, then you can plan your entry. But even then, always keep your greed in check. If you are able to make 20 to 21% in a year, you are already outperforming major investors like Warren Buffett. So keep your targets realistic, aim for small but consistent profits, and always ensure your stop loss is well defined and minimal by entering as close to the trend line as possible. EQNR operates in the energy sector, focusing on petroleum and renewable energy. It has a market cap of 70.19 billion, a PE ratio of 8.25, EPS of 3.11, and a dividend yield of 5.45%. Next up, we have NIU, where we have gotten a horizontal breakout, unlike the previous one where we had a downtrend breakout. This chart I have opened on a daily time frame, and the breakout has happened after 5 months of time. Let us analyze this chart a little closely. As you can see, this stock made a high on the 7th of October, 2024 of $3.50. And since then, it has traded below this level. But this week, on the 18th of March, we have gotten a breakout. And now, as you can see from the last 4 sessions, the stock has been trading above the resistance line, which is a good sign that the breakout is holding so far. If you want to see a few key metrics, let us start with the exponential moving average. The stock price is well above its 200-day and 50-day exponential moving averages, so no problems there. Also, if we take a quick look at volume, we see a significant uptick while giving the breakout. This is a very positive sign because the breakout is being assisted by an increase in volume as well. Now, I would like to reiterate the point that I was making for the first stock. Always enter as close to the trend line as possible and on a pullback. Let us take this one for understanding. You see that the stock gave us a breakout on the 18th of March, right? And like I always say, wait for a pullback. The stock then pulled back very close to the trend line on the 21st of March. Assuming that you had a limit order placed approximately 3% above the trend line, let me zoom in so that you can have a clear idea. Let's say you had a limit order placed for this stock at around 3% above its breakout level, which comes to around $3.60. You placed an order, and your order was triggered. In this case, you were targeting a stop loss of 3%. So if the breakout had failed, your entry at 3% above the trend line and a stop loss 2% below the resistance line would have resulted in an overall loss of 5% if the breakout failed. Now let's assume that the limit order was placed, got executed, and you entered here. By the end of the trading session, you would already be making 7%. Now, if you want to keep your stop loss even tighter, instead of placing an order at 3% above the resistance line, you could place an order at 2% above the resistance line. Even in that case, your order would have been executed, and by the end of the day, you would be sitting at around 8% profit. I know this is easier said than done, but in the stock market, we have to take our chances. If the setup is in our favor, if we see a volume spike, if the breakout has happened, if the pullback has occurred, and if the buying interest is emerging close to the resistance line, then all these check marks suggest that the breakout might sustain. At this point, we enter the trade. If, even after checking all the boxes, the setup fails, then there is nothing more we can do. It's just the nature of the market, and we have to live with it. But this is also how we make money. Also, a few more points to add. Looking at the resistances that this stock faces, switching to the weekly time frame, the very obvious resistance that seems to be forming is around $4.50. This level is clearly seen as a resistance. But if we calculate from the current market price, this resistance sits at around 18%, which is still a very good return. 18% is a very good return in a short period of time. So keep this level of $4.50 in mind, as this could act as a resistance. Also, this stock is a little volatile, so you may see wild swings. It could go up 4%, come down 5%, then go up 10% again. This is the nature of the stock. It's a high beta stock, so this is something you should keep in mind. NIU operates in the consumer cyclical sector, specializing in electric bicycles and scooters. It has a market cap of 268.31 million, no PE ratio, EPS of negative 0.34, and no dividend yield. So guys, if you have liked the video so far, let me request you to kindly give this video a thumbs up and also comment on the video. If you are a subscriber to the channel, YouTube will show you the video first, and based on your engagement with the video in the form of likes and comments, YouTube will decide whether it wants to push it to new viewers or not. So if you are a subscriber to the channel, I kindly request you to please give this video a like and also comment so that it is pushed to a wider audience. The viewership of the channel in recent times has reduced drastically, so I would need your help. Now let's look at a few stocks. Next up, we have ABEV Ambev SA. Here, I have opened the chart on a weekly time frame, and we have a downtrend breakout. This downtrend had 3 touch points before, which is a positive sign for a downtrend and breakout. The trend start price was approximately $3.20, and the downtrend began in July of 2023. The breakout has finally happened after 1 year and 8 months. The current market price for the stock is $2.36, and the next immediate resistance is at around $2.40. So keep that level in mind. ABEV operates in the consumer defensive sector, producing and distributing beverages. It has a market cap of $37.12 billion, a PE ratio of 14.00, EPS of 0.17, and a dividend yield of 3.85%. The fourth company today is STNE, which also has a downtrend breakout with 2 touch points. The downtrend start price was $19.46, and the downtrend began in February 2024. The breakout has happened after 1 year and 1 month. The current market price is approximately $11.10, and the next clear resistance sits at around $11.77. So keep that resistance level in mind. STNE operates in the technology sector, providing financial technology solutions. It has a market cap of $3.27 billion, no PE ratio, EP- 0.85, and no dividend yield. The last stock for today is HMC, and this again is a downtrend breakout. The downtrend began in March of 2024, and it has been exactly 1 year for the breakout to happen. The current market price is $30, and the next obvious resistance is forming at around $30.60. The good thing about this one is that it seems to have pulled back to the trend line. So maybe in a couple of sessions, if it comes further down or shows strength from the trend line, then we can look for an entry. But always keep in mind that the resistance is not that far. HMC operates in the consumer cyclical sector, manufacturing automobiles, motorcycles, and power products. It has a market cap of $46.44 billion, a PE ratio of 6.98, EPS of 4.30, and a dividend yield of 4.73%. I often get comments from viewers asking how I screen the stocks I discuss. Unfortunately, I don't have a public portal or website to share because I don't rely on one. Coming from a software engineering background, I've built my own custom algorithms to scan the market for various setups. Stocks breaking out of a horizontal range, stocks breaking out of a downtrend, stocks at support while in an uptrend, stocks nearing a breakout, both horizontal and downtrend, stocks that have broken out and are now pulling back for a retest. I run these algorithms on historical data for around 3,500 tickers, then manually analyze the shortlisted stocks. If I find a promising setup, I share it in my videos. So if you want regular updates on stocks at crucial levels, I'd highly recommend subscribing to the channel. That's it for today. Hope you found this useful, and I'll see you in the next one. Have a great weekend.